Hey guys, what's up? So once again, I'm gonna be giving my thoughts on Bitcoin. All right, we've had quite some action. We broke down here. So yeah, I think a video at this moment is a good idea. I'll discuss my future game plans and what I'm watching, what trades I'm willing to take, and what triggers them. All right. So first things first, the sponsor of this video is still PrimeXBT, a great exchange. I'll leave a link in the description as well as a promo code you can use to have a reduction on your fees. So definitely make sure to check them out. And apart from that, please feel free to give the video a like and to subscribe to my YouTube channel. That helps me a lot and motivates me to keep doing these videos. Okay. Also feel free to leave a comment with what you think about all of this and about all of what I explained here, all right, or your thoughts on Bitcoin. I really appreciate that. Okay, so let's get into the video. So when we were trading up here, I was watching this local Bitcoin range, right? So this one and this high. Okay, and I said that I was looking for a sweep of the lows and then a quick reclaim to be looking for longs and target higher prices. Okay, so we got the breakdown. We did sweep all of this liquidity, but we closed pretty ugly, right? As you can see, we closed below range low, below all our key levels. So not really interested in blindly longing around here. Now, what I think is that if this was bullish, we would have seen a wick and then in an instant reaction, okay, maybe some consolidation here, but then straight continuation to the upside, okay. We didn't get that. Instead, we broke down and it's looking ugly. We're consolidating down here. So I personally don't see a reason why we wouldn't slowly be trading towards liquidity below this key low, okay. So back in December, early December, we made this big giant nuke here, made this low, got the bounce, and left that low untapped. So right now, broke below this liquidity. So in my opinion, the draw is gonna be on this low. Okay, so as I've explained in my previous videos, I said if we sweep this liquidity, okay, things would look good. And I said I was personally thinking 42k would hold. Well, right now, if I see this close, I personally think we'll see a little lower. So what are my game plans? So for now, I'm simply sitting out. I'm not interested in taking a trade here. What I would be interested in taking would be if we see an accelerated downside into these lows, okay? So if we sweep liquidity below here and liquidity below here, maybe even below here, but not sure we'll get there. So if we see a liquidity cascade and accelerate to the downside, first place where I'll be looking for longs would be 38, 36k, somewhere around there, okay? Keep your invalidation below here. These lows should hold, okay? Second scenario, if we don't make it to these lows, well, then simply I'm waiting for a reclaim of this range low. So if we start breaking back above here, then I think we'll accelerate in here and then ultimately go for liquidity above these highs into this clean supply area, okay? So as you can see, the monthly open, which is also the yearly open, is resting at 46,220 approximately. So if we manage to reclaim the monthly open or the yearly open, well, then I think we have a low in here, and then you can start looking for longs. Keep your stops below the lows at that point. Ideally, we then have swept this, okay, and then go for the reclaim of the monthly open. Then I think it's safe to keep your stops below here or maybe a little higher. Look for longs and target up here and up here, okay? So just in general, the yearly open is a great indication of what trade you should be looking for. If we see downside early in the year, that's actually a pretty good sign, okay? So, and then what's your trigger for longs? Well, that's simply a reclaim of the yearly open. So right now, if we simply remove all of the levels and look at the yearly chart, you can see a very small wick to the upside, and we're now seeing downside, okay? So if we reclaim the monthly open or the yearly open, that should also mean that we have at least a local low in on the downside, okay? And then the wick to the downside is set, then this becomes a deviation below or a sweep below the yearly open, and then you can safely look for longs and target higher prices, okay? So two scenarios. First one is look for longs lower down, okay? Otherwise, look for a reclaim of this range low, then look for longs there. If we don't sweep this low and see upside from here and see a local range build up and see something like this where we sweep the high, I'll be looking for a short targeting this low and this low, okay? So that's pretty much what I'm watching here, taking it very easy. I haven't blindly longed down here. That doesn't make sense in my opinion. I tried a little long up here after this 4-hour close, but then as you can see we got this, so got stopped out here for a very small loss. That's fine. For now, taking it easy, looking for a reclaim of the yearly open for longs, or longs lower down, or shorts on the retest of range low. All right, I hope that's clear. I hope you enjoyed that. Leave a like, subscribe, and I'll see you in the next one. Peace.